What's going on, guys? It's Jake here, and in this video I'll be talking about how I was able to grow my portfolio from $0 to $6,500 on the Robinhood app in about 2.5 years. I think it is now about 2.5 years or so. But before I get into the video, if you're interested in investing in the stock market, things like that, definitely consider subscribing to the channel because I do talk about all of that kind of stuff. But getting into the video, so how I was able to grow my portfolio and how I am really just generally able to invest in the stock market successfully. And you can definitely check out other videos on my channel where I go over my Robinhood portfolio and show you all the stocks and ETFs that I own, because in those videos that's more of an overview, and in this one I'm going to be talking a little bit more about how I actually do it, and maybe you could find some helpful information in this as well. And by no means am I an expert or the best person out there. I'm just simply sharing with you guys what I do. So first of all, first thing that I do is I am definitely more of a long-term investor than a short-term investor. So I really don't do any short-term trading at all, not even like swing trading over a couple months or anything like that. So I don't do any swing trading, definitely don't do any day trading, and I also don't do any options trading. So with that, I much prefer long-term investing, and just overall, I just think it's definitely the better way to go. I know a lot of people, when they are beginner investors, they do like going short-term, but in my opinion, it's just an easy way to lose money. And I'm sure there's a lot of people out there trying to sell you something saying that they are really good at short-term investing, but I do not buy that. I see very few people who are actually successful, and you see a whole lot more bigger names that are successful at long-term investing. And just overall, it's better in terms of tax purposes. So if you live in the US, it's much better to be a long-term investor than it is a short-term. Just statistically, it is better to be a long-term investor than a short-term, because over the history of the entire stock market, long-term investors have done significantly better, and it's just a whole lot safer if you do have a long-term investing strategy. So long-term over short-term is definitely probably, this isn't necessarily ranked on how important these things are, but it is a very important thing to take into consideration. After that is just going to be simply depositing money into your portfolio on a regular basis. So this is something that may seem relatively obvious, but it is something that you can forget about. And I'm sure when you're first starting investing and you get a couple $100 or maybe a couple $1,000 into that portfolio, you might be thinking that you're just going to simply be able to grow that portfolio through dividends and through just capital gains, things like that. But in reality, you should be regularly depositing money into your portfolio to some extent. And of course, that's totally based on your own financial situation. So if you don't have all your other finances set out yet, this might not be a good idea. But if you do have pretty solid and you are relatively financially healthy, then it can be a good idea. And it is good for your portfolio to regularly deposit money, which again can be a kind of difficult thing to do and can just be something you simply forget to do, especially if you have a lot of outstanding debt or things like that. Next thing is, this is just my personal investing strategy, and doesn't necessarily mean that you have to do it as well, or that it's the best one out there or anything like that, because I think there are a ton of different good investing strategies, but this is just one I personally like. So in my investing strategy, I target more large market cap stocks. So if you take a look at my Robinhood portfolio, I don't think there's a single stock in it that's like in the small market cap section, or even micro cap, definitely not. But I really don't think any stock in my portfolio that I could think of right now has a small market cap. And usually market cap, it doesn't really mean a whole lot, It's good for crunching numbers if you're actually analyzing stocks and things like that. But I just simply prefer bigger companies and just investing in bigger companies, because it's a whole lot less likely that they're going to go out of business anytime soon. And it's a whole lot more likely that if they are able to grow to that size, they're probably a pretty reliable company. Another thing I look at as well is that I just simply like targeting a lot of blue chip dividend yielding stocks. So with the blue chip part of that, these are typically household names, probably companies you have heard of. And just because you've heard of a company doesn't mean that it's necessarily a good stock. So that's why I don't invest in every company, every blue chip company out there. But I do like targeting a lot of different blue chip companies out there. And also I like targeting dividend yielding companies. So with dividends, I think that's just another great investing strategy. My entire portfolio isn't completely comprised of dividend yielding stocks, but a strong majority of them are dividend yielding stocks, which I think It's just simply a smart investing and strategy, because pretty much regardless of how the market's doing, you're going to be getting that dividend yield in at 4 times a year, or in some cases 12 times a year if it's a monthly dividend stock. But either way, I definitely prefer dividend yielding stocks over non-yielding stocks. But not to say I do still target some growth stocks, but continuing with the dividend yielding stocks, I also like to target good dividend yielding stocks. So just kind of some basics when you're looking at dividend yields. So one, if the yield is very high, like it's above 8, 9, 10%, it's very unlikely that that company will be able to continue to put out that dividend yield. And also an important thing to look at as well is how long has that company actually been giving a dividend yield, and have they been increasing it annually? And there's a lot of free resources out there where you can check out this information. I like Yahoo Finance a lot. They have some pretty good info in terms of dividend yields. Dividendchannel.com is super good as well. But other than that, just targeting good, solid dividend yielding stocks is a very important part of my investing strategy as well. And then another thing that I do as well to help my portfolio grow, and how I've been able to grow my portfolio, is actually mix in some growth stocks, but this isn't a very large part of my portfolio. So I, can't lie to you guys and say that I only target dividend stocks. I only target these huge market blue chip stocks. By no means is that my entire portfolio. I do target some growth stocks as well. One of my best growth stocks was actually Netflix. So I bought Netflix about 2 or so years ago, and I actually sold on them recently. And it was one of the few stocks that I've actually sold on in my Robinhood portfolio. And Netflix was actually a great growth stock for me. I actually made a ton of money off of Netflix, even though I didn't buy a whole lot of shares in them, which I wish I would have bought more, of course. But I did actually make some pretty good money on Netflix, and that was definitely one of my best growth stocks. Some other pretty solid growth stocks I have that I bought quite some time ago are PayPal and Twitter. Those stocks have been doing great for me as well. And then another one which I would put into this category is also Facebook. Facebook has also been a growth stock that's been doing pretty solid for me, but most of my portfolio is not comprised of growth stocks. And I do think it's a little bit more difficult to target growth stocks than it is to target the rest of my stocks in my portfolio. And then last but not least, on how I've been able to grow my portfolio, how I've been able to make as much money as I have been, is to simply diversify. So when a lot of people look at my portfolio, they say, whoa, you own way too many stocks, and that, you should just target your better stocks and get rid of some of those worst ones. And of course, I, always say to them, when I first bought those stocks and when I first bought into certain companies, I did not know that certain companies were going to do better than others. I could have guessed that they were going to do better, but I definitely did not know for certain. And there's a lot of companies in my portfolio that I did not expect to do as well as they were doing. I expected them to be a little less, or have a little less growth than they have, but they've ended up doing very good. Like if we take a look at some stocks like Nike and Starbucks, I bought in those because they're good companies and I did like them, but they're actually one of the best growth stocks in my portfolio. And I just didn't guess that. If I would have guessed at the time I was buying my portfolio and adding stocks and different companies into it, I would not have guessed at all that Nike and Starbucks would be some of the best growth stocks, but they have been, and it's been really nice. Diversity in your portfolio is important, and just buying random stocks that are different doesn't count as diversifying. Typically, when you're looking to diversify, and there's a ton of different ways you can do this, but if you're buying individual stocks, a great way to do it is just simply looking at different stock market sectors. So are you actually owning stocks in different sectors of the stock market, as well as different industries, obviously? And then also another great way to diversify is buying ETFs that, usually mirror some sort of stock market sector, or like the S&P 500, Dow Jones, things like that. But other than that, guys, that's really it for this video. So the 5 things that I talked about in this video was that I am a long-term investor. I try to regularly deposit into my portfolio. I target large cap blue chip dividend yielding stocks. I also mix in some growth stocks into that as well. And then I also like to diversify with my portfolio. So other than that, guys, that's really it for this video. So like I said earlier in the video, if you are new to the channel, definitely consider subscribing. I talk about the stock market, personal finance, entrepreneurship, things like that. So if you're interested in that kind of stuff and you're not yet subscribed, definitely consider subscribing. And also in the comment section, if you are new to investing, there are quite a few links down there that are linked up to apps and different brokerages that I personally like to use myself. I think in the description right now, I have the Robinhood app. So if you use that, you sign up, you get a free stock. I also have Acorns down there, which is a more auto investing app. And if you sign up with that, I believe you get $5. I have M1 Finance, which is a long-term investing app, which you get $20 if you sign up in the month of January, which is like today. So it might be too late by the time you see this video. And then lastly, I have Webull, which is also another brokerage that I've been more recently using that I do like a lot as well. And you actually get 2 free stocks when you sign up and fund your account. So definitely feel free to check those out in the description. And also, Feel free to leave a comment below what you think has helped your portfolio grow, or maybe some things you're struggling with or doing good or doing bad or doing poorly as an investor. Definitely let me know. I always like seeing what you guys have to say. But other than that, guys, thanks for watching. I hope you enjoyed.